What's up, everyone? It's Caddy with MoneyVest. So, ARM IPO, the hottest, biggest trending IPO of 2023, is going to take place this Wednesday, September 13th, on the day of inflation numbers coming out in the US. And guess what? The ARM IPO is already oversubscribed by over 10 times. And by the time we get to the IPO, it's probably going to be oversubscribed by over 15 times. So there is significant demand. I'm going to break down everything you need to know about the upcoming IPO from ARM, valued at roughly over $54 billion. As always, if you enjoy this video, find it helpful, make sure that you drop a like, subscribe to the channel, link to our Discord, Patreon is going to be down below. We'd love to have you on board. And of course, you get access to all the buy and sell alerts, members only private videos, and of course, our intrinsic value spreadsheets as well. So links down below. So this right here is some of the company stats, revenue, and everything. We've talked about it in our previous video. So I would highly encourage you guys to check out this video that I posted 4 days ago, going over everything. 22-minute video talking about the fundamentals of the company, cash flow situation, the balance sheet, where does ARM really fit in the entire semiconductor ecosystem. So everything is covered in that video. Make sure that you check that out. But the IPO set date is going to be 13th September. So in just a couple days, on Wednesday, is when they are going public under the ticker symbol ARM. So ARM's IPO already 10 times oversubscribed. So the oversubscriptions already happened by over 10 times, and bankers plan to stop taking orders by Tuesday afternoon. So by tomorrow afternoon, the order book is going to get closed a day early. And usually, it happens all the way up until the IPO, until the public listing goes up. That's when they're taking orders until. But in this example, because the demand is so strong, they're planning to close the order book a day early on Tuesday, but it's still planning to price the shares on Wednesday. And it is not uncommon for books to close early on IPO day, which is often indicating of a very, very strong demand, which I'll go over in just a minute because, again, the valuation is significant for ARM IPO right now because it's going to be listed at over 19, 20 times sales and well over 80 to 90 times cash flow and earnings multiple. Not to mention, after the strong demand, it's possible that the IPO price ends up being a lot higher than the range-bound price is between $47 and $51 per share. And of course, valuing the company at $54.5 billion, right? So significant valuation here relative to its revenues, cash flows, and earnings. So SoftBank shares obviously did rise 3.8% during the morning trade in Tokyo, and they're up over 20% since the start of this year because SoftBank does own right now 100% of the company, and they are issuing about 10% of ARM as a publicly traded company. 90% they're going to retain for themselves. So ARM, which is a key part of the chip supply chain industry, designing semiconductors found in most of the world's smartest smartphones, had earlier sought to be valued at $60 to $70 billion in the IPO. Now, here's the thing, right? I talked about it in one of my other videos. This right here was the video that I talked about it, so make sure that you do check that out, where smart money knocked down the valuation from $60-70 billion to 54. And that just goes to show that smart money understands where the valuation should really be. And 54, even 54 is a bit of a stretch. And then, of course, you got the oversubscription, which is going to knock that valuation back higher. Not to mention that on IPO day, it's possible that we do see a significant amount of demand for the shares, which, in my opinion, could create a lot of bag holders, which I'll go over in just a minute, the data points, statistic data that's suggesting that. But there's a lot of sentiment and a lot of hype around artificial intelligence. And since ARM sits at the very important and integral part of that food chain, providing IP core processing and patenting, licensing technologies, it's very essential to a lot of the designers, the fabless chip companies, and of course, eventually to foundries as well. So considering how much hype and demand and sentiment there is for artificial intelligence, I wouldn't be surprised if this right here, the $47 to $51 range, gets literally knocked out and we're starting at $60, $70, or even $80 per share on IPO day on Wednesday. So again, we'll find out how crazy this IPO gets. But this right here is some data points suggesting the 10 biggest US IPOs over the past 4 years, okay, are down on average 47% from their closing price on their first day of trading. That alone should tell you a little bit about the IPO market and how inflated it gets in the private markets. And when the companies actually do go public, bankers end up making a lot of money because they are basically billing a percentage of the money raised. So if ARM is raising $4 billion, $5 billion, they're going to make 2% off of that, right? So it's in their benefit to raise these valuations to an insane level so that they can actually charge a higher fee of the amount being raised, right? Because they're issuing X amount of shares at X amount of prices. So that combined is what they're raising for the company, and they charge a percentage on that as a fee. So, but on average, 47% decline. So pretty much prices have been cut half. And guess what? ARM IPO, I did the fair value calculation. I did the intrinsic value calculation. My fair value was exactly 47 to 48% decline needed in order for this stock to be trading at its intrinsic value. So that should tell you a little bit something about the prices that are coming off of these IPOs. Now, only 2 stocks in those 10 are up from their IPO prices. There's Snowflake and it's Airbnb. Airbnb is actually turned profitable now, so that's very good. And ARM Holdings is also profitable, very nice margins, but that still doesn't take away from the fact that valuation is a bit too high. And even institutional investors invited to buy into those 10 IPOs before trading would be down on average 18%. And this was from a professor, University of Florida professor who studies IPOs, says, and I quote, "If you're buying in the market, on average, you're buying at a premium to the offer price. And for almost all retail investors, buying and holding a low-cost index fund, of course, is the best strategy. But of course, picking individual stocks and more specifically buying inflated IPOs trading at a premium is certainly not the way to be making money here. In the past 4 years, so 4 years now, over 260 IPOs have had the debut with the stock market values of over $1 billion, mostly in technology, healthcare, and consumer discretionary sectors. And they are down on average 29% from their offering prices and are down 49% from their initial trading highs. So that should also tell you a little bit something about, what this IPO could end up looking like. Now, again, it's a profitable company, very much in the semiconductor industry, taking advantage of the artificial intelligence wave, and there's a lot of hype and sentiment. So it's possible that it does rally. There's no doubt about it, but it's the process and its valuation certainly seems a little too extended. And this right here was an article from September 5th, which piqued my interest a little bit. It was quite interesting. It says, NVIDIA's rally is going to show traders what a market bubble looks like. And this was from Rob Arnott, an analyst that pretty much put together a table of the aftermath of 2022. And all these companies that were at the time trading at all-time highs, just significant valuations. Eventually, they ended up crashing, 70, 80, 90%. And in the last 22 years, the annualized return has been abysmal compared to the S&P 500, which is up 6.3% on an annualized basis. Only Microsoft is on this list that's actually outperformed, right? Up over 8.5%. Oracle, 5.6%. Qualcomm, 2.8%. HP, 2.8%. Sun Microsystems down 24%. Dell Computers down 8.8%. So the main premise of this article, and further on, he goes on by saying that overconfident markets paradoxically transform brilliant future businesses prospects into even more brilliant current stock prices. And NVIDIA is today an exemplar of that genre, a great company priced beyond perfection. He does mention 110 times earnings, which is not accurate. Forward basis, NVIDIA is trading at 30 to 40 times earnings multiple. So that, again, in itself is not overvaluation, but yes, it is expensive. I wouldn't consider it as a bubble, but I would consider it at a price where it's trading at an expensive valuation. There's a difference, right? Bubble, I consider more bubbles as a term for companies or trends or things that are not validated, they're not profitable, and they're completely built on hype, okay? With NVIDIA, with artificial intelligence, these are concepts, these are technologies that are going to stay with us for a very long time. Like, they're basically going to revolutionize the way we interact, the way we do work, the way we do everything, right, with artificial intelligence. So there's market validation in that. And NVIDIA is a very strong, profitable company, profitable business. But of course, doesn't take away from the fact that it still trades at a bit of an expensive valuation, trades at a premium. And it can demand that premium for some time because its products are way superior and probably the only company that's offering these high class advanced GPUs in the market for artificial intelligence. So we can demand that. But just want to draw that link between NVIDIA's valuation to ARM Holdings and kind of help you understand that, okay, ARM Holdings, it can rally. It has the potential to, just significantly have that hype and that sentiment, but It's oversubscribed. That goes to show the strong demand's really there, and the valuation will be significantly higher than where smart money is placing that valuation in the private markets. So hope you guys enjoyed this video. Just be careful is what I'm going to say, and definitely do check out my other video where I go over the entire fundamentals of ARM holdings and also talk about the fair value, the intrinsic value, and where I would personally be a buyer of this biggest tech IPO in 2023. So hope you guys enjoyed this video. Find it helpful. Make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.